Welcome to the Forex Guys YouTube channel. Please don't forget to like and subscribe, and if you have any questions, please leave a comment below.
Hi guys, Matthew here from forexguys.com. Welcome to our very first Trading 101 video, and next to me I have Roger from Forex Guys as well. Hi Roger, how are you?
I'm very well, thank you, Matthew.
Good.
I am one of the traders for Forex Guys.
Senior trader.
A senior trader, okay. And I'm going to be taking you through how to put a trade on in its simplest form without too much detail. So if we look at the screen that we're looking at right now, so we're going to dive straight in. We're looking at a currency pair, which over here is known as cable or pound dollar. This is IG.com's platform we're looking at, which is one of the major brokerage sites out there. I appreciate that you may be using another brokerage site, or sorry, trading platform, and we'll look at things in a slightly different way. But clearly, we can't run through 100 different sites, so we're just going to stick with this for now.
That being said, if you haven't signed up to a brokerage site, then do go to someone like IG.com. You can sign up and get a free demo account where you can play with a fake £10,000 or dollars or whichever country you're from, and actually, try trading anyway.
As Matt says, it's a very good way of practicing errors, getting to use the whole of the trading platform, seeing where everything is, and if you're going to make mistakes, make it a demo. Why? Because it's not real money. As you can see, they give you £10,000. This is Matthew's one he's been playing with, and he's £288 up at the moment. So that's better than nothing, I suppose.
I've not had this one long.
Although this is actually nothing.
This account's purely for the videos.
Okay, so on all trading platforms, there has to be an area which I'm just pointing to here, which is we would call the deal ticket. And the deal ticket gives you all the information you need to be able to place a trade. Now this is a spread betting platform, and there are two types of trading methods, for want of a better word, and on most brokerage sites. You spread bet, or you would do CFDs, trade CFDs. We're not going to get into CFDs at the moment. We've got to pick one or the other. We're going to go with spread betting, and I'm just going to keep it very simple for you. So the very first thing you see is you've got a sell box and a buy box. So if you're buying, you're going long, you're going up. If you're selling, going short, you're going down. And you can only go in two directions, up or down. You've also got the size, and that is the size of the trade. At the moment, we've got 5 there in the box, which means it's pounds, pound sterling on this particular site, and so it would be £5 per point if you were trading. We can alter this size of trade, so we can make it 10, or we can make it anything you want really, but 3, 4, 2, whatever. I'm going to leave it at 5. Once you've got the size of trade, we then need to think about, well, where are you going to put your stop loss? So what is a stop loss? A stop loss is a line in the sand, an area on the chart that if the trade goes against you, if the price action, we can see it at 68, 69 here at the moment. And if we were to put in a stop of 20, let's run that up to 20. I could have typed it in, of course. That means 5 times 20 is 100. If it went against you, that would be £100 you would have lost. The limit is when the trade goes in your direction. You set how many points you want the trade to move before it actually stops the trade and cashes you out. In this case, for simplicity, I'm making it 20 as well. So that would be 5 times 20. You'd make 100 or lose 100. You'll notice there are two prices. That's called the spread. We can see the difference in price here from 68 it's going to fluctuate the whole time, so I'm pointless me trying to say, but it tells you the actual spread difference, and it's 0.9 on cable, and that's probably, I would think, the same across most sites. It's a heavily used currency pair. So once you've decided how much the size of the trade is going to be, once you've decided where you want to put your stop and your limit, so how far the trade can go, how far it can limit, we then need to think about the direction. So I've not been looking at this pair and done no technical analysis whatsoever, so we're just going to put buy on it. And what we'll see immediately is the margin that's against this particular trade. So what this is telling me is that if I want to trade £5 per point with a stop of 20, limit of 20, the margin required to put this trade on is 1926.31. So if you've got a funds of 10,000, well, I tell you what, let's actually place the trade. Just place the trade. Now we're in trouble. We're £4.50 down immediately. But if we look at the top here, it will tell you the funds you've got in total, the margin that you've just used for that particular trade, and the available amount of margin. So when we're doing more videos on margin and getting a lot more detail on this, but what it means is that you've got just under £2,000 worth on this level size of trade. You've got £8,000 left. It means you've got 4 more trades of this size that you could put on before you cannot put any more on.
Which is designed just to protect your money, really, at the end of the day, isn't it?
Well, it's a demand of the site.
Yeah.
There's actually a strict formula for it, and I've just clicked on the info, and it starts to run through how the margin would be calculated. I'm not going to cover that here, but the basic data for that would come from this bit of the box. Other currency pairs would have slightly different numbers here, potentially, depending on which ones they are. So we'll come back to this. The other thing that we can do, we can set an order, which means we can set a price level that we want if the price action moves to a level. So if we were to, I'm just going to mark this up for you. So if we were to put a line up at 116, convenient level, if we wanted to put, oh, okay, that's not stopping for me. Thank you. If we wanted to set an alert at this level, then what we could do is take the price up to that point. You see the line go up. We could set the stop, we can set the limit, and then we can have the price, when their price action touches that, it then puts the trade on automatically.
Sort of like a pre-order system.
Exactly that.
Yeah.
So if you're working full-time, part-time, whatever you're doing, and not able to watch the screen the whole time, you can go to work, you can, maybe you're commuting, maybe you don't have, on your phone, on your app, you don't have a signal where you can do anything for a while. You could be on the underground or whatever, wherever you are. You know that that's the price you want to buy or sell at, and when the price action hits that point, it will automatically place the trade, which is a really good thing, really. The other, again, we'll spend a lot more time on this in more detail in another video, but the other little helpful thing here is set price level. We can set alerts so that if we go back to the same price level here, that instead of placing a trade for you automatically at 11600. Oh, hang on, I'm not doing this very well. This isn't my computer. What this will do is, I'm just going to click this a couple of times. That is now set an alert. So when the price action hits this laptop computer will start making an alert sound.
That's right. And also if you're logged in on your other devices, so your computer, tablet, phone, it will alert out to those devices, assuming you're signed into the same account.
So if rather than be committed to a trade, you can set an alert. Your phone will message you if you're at work that you've got an alert. Oh, okay, I'll look at it. Price has now got there. Yeah, I want to buy or sell at that price. So that's a really nice feature. It means you don't have to stare at the screen. When you come home in the evening, or if you're able to get to the thing, the alerts on your phone, you can see, go to price level, and you can see the alerts that I've just set. So if you can't remember, that's great. If the price action triggers it, you can see here that where they get triggered, what date, etc. And when you're done with them, just delete them. I'll delete the lot anyway, because Matt doesn't want that.
No.
quite sure. So we'll come back to the deal ticket. That is a very simple, quick way of how to put a trade on. And this is a spread bet. You've learned how you understand why you put the size of trade on. You understand what your commitment would be. So if you've got a 20 pip stop, 20 point stop, that means if at £5 per point per pip, you would be £100 down. If it went in the other direction at 20 points or pips, and we will explain what pips are in another video. Can't get everything in this one. Then that would be, you'd make £100. Thank you very much for watching, and I look forward to talking to you again soon.
Thank you very much. Thank you very much for watching our video. Please don't forget to like, subscribe